Thanksgiving coming up here. First thing we're going to do is give away some money. We like giving away money. I don't know, the guy who seems to get a lot of money around here, Mr. Les, got another check.
Yay!
I don't know how we get so many checks out of here, but that's, we have a network marketing company here, and the Les seems to be bringing in a lot of people, so he gets a lot of checks. We also have one for Paulie.
Paul's in California speaking.
Well, I'll spend it. I'll cash it for you. Anyway, a couple things we want to do is welcome all the people or anybody who's online out there. Doc, do you want to say hi and tell us what's going on for the rest of the year here for some of the people who haven't heard?
You always do it to me, don't you? No prep at all. Well, I will tell you that I can tell you a little bit of unrelated news that we've managed to nail down today is we are going to be having a monthly program with Tim Hicks. A few weeks ago, Tim came in and did a really good presentation for us on home inspections. I believe his focus was different problem areas on the home, going from foundations, roofs, that sort of thing. Well, anyway, every third Monday of the month, beginning the 18th of December at noon, he's going to be having a course that will be working in detail the various aspects of home inspection. I think that's going to be a really fun
course. Here for Tim Hicks's show. Yeah, you were here. Wasn't that great?
I already used him.
I mean, just blows you away. Also, I believe you have we have another show coming up on 1031 exchanges.
Yes, we do. Let me check on that. That's actually coming up on November 21st. That'll be next week. It'll be our first of what will now be a monthly program on the 1031 exchange.
Who knows what a 1031 is?
Basically, anybody in the audience that is buying and holding real estate, you need to look at this. This is a big deal, and you can save a lot of money. The upshot of this
is
if you're buying and flipping, what you need to do is hold some of those properties so you can take advantage of 1031.
Well, the 1031 is actually Form 1031 in the IRS form book, which you heard about. You can sell a property 6 months. If you buy another house within 6 months, you don't have to pay the capital gains tax. You can push it down there. I did over 100 of them with Dave Foster, who's going to give our class. And if you're not doing 1031 exchanges, you guys are just like wasting money giving it to the tax.
You're literally using the government's tax money to continue to do your own investments.
Yeah.
It's amazing. And you can work it so you actually end up never paying the tax. Yeah. Well, you can option one is
I always say, I'm going to pass my tax burden down to my son, and then after that, I don't really care. So, yeah. The government's going to always get their money somewhere, but yeah, we can, there's ways to eliminate some of that. We don't like to say you never have to pay taxes because you'll be busting the door down. Surely. What else we got going on, Steve, this week?
As far as training or?
Yeah, what's going on for training? I wasn't here yesterday. How's your boot camp?
Very good weekend. Just talking about deals that are coming up.
Anybody have any deals that they want to bring up today?
Sure.
You got one?
Yeah.
Cool. Let it hear. Bring it on up.
Yeah.
You got pictures? Bring it in. If you want, you come up. If you want to show your properties, if you come in a little early or send them in, we'll put them up on the screen so you don't have to hand out flyers and stuff. And markers will put them up. Tell us what you got.
Okay, well, this deal is actually, I'm looking for private money. I've got a property worth $225 fixed up. I only have a $70,000 first mortgage on it. I need a minimum of $50,000. And
here you go.
Great.
Oh, Biddy Buck?
Ones around here.
Boys now.
And the plan is to fix and flip in 6 months or less. So if you're someone that would like to participate, make some money on their money, I have a sheet right here that explains the property and the breakdown. And also I'll give you my card. And do I have any?
Take one of those. Okay, I'll take one of those.
What do you, so tell us, step here for a minute.
Okay, sure.
See that? Look at that. You got 3 takers right here. Get your hand in the back.
I'll take one.
Hand in the back.
Thank you.
So tell us how you found the house. Tell us your experience on, are you a professional flipper or professional wholesaler or
Well,
is this you do?
No, I've already flipped 8 houses and done real well on some of them, not so well in 2008. And this house, actually, I had in place as a rental. I lived in it for 2 years, bought it in 2006, lived in it 2 years, then made it a rental for a long time. I got overextended from 2008, had to sell off a lot of properties, lost money in a very professional way. And
With a smile on your face.
I never worked so hard to reduce my losses instead of make money. So I worked really hard to reduce losses instead of making money. It was not a fun chore, I'll tell you.
Didn't know you were doing that.
Yeah. Oh, I figured it out pretty fast, but anyhow, this is my last of my rentals, and I'm living in it presently, but I'm prepared to move out immediately, get the thing financed and sold, and
What's your name and phone number? Tell everybody what your
okay, my name is Forrest White. My phone number is 615-419-9839. My email address is Mr. Forrest White, MRFORREST, white like the color, @gmail.com.
I have a quick question.
Yes, sir.
Why don't you just sell it as is for 150?
Great question. The reason I don't want to just sell it,
That's a lot of money to put in a 1,400 square foot house. Looks like you're getting about the same return. Sell it as is and get it out. I mean, just on paper.
well, when I work up the numbers, I figure the profit, if I just sell as is, it's going to sell around 150, 155. That gives me about 30,000. If I fix it up and sell it 225 or 220 price point, I get 60,000.
You owe 70?
Yes.
Is this the one with the lien? I hate to burst anybody's bubble.
Yes.
30,000, I think you said.
All right. We talked about this the other day, right?
Yes, we did. Yes, we did.
And that's exactly what I said. Why don't you just sell, why don't you just sell it as is?
And when I work up the numbers, I figure the profit's around 30 if I sell it right now versus if I fix it up, the price point yields about 60. If I can make twice as much money, I'm willing to put in the work to get twice as
Are you
much
just
money.
looking for an investor to loan money and you want to pay a percentage on the money? Or are you looking for a partner to go in and invest and flip?
At this point in time, I'll consider any and all options until I've got some commitments. If I have a commitment from somebody, I want to get this
So
deal.
you don't have the money to get this property done.
Correct.
You're just looking for money to get the property done. And you could do it either way. Someone could loan you the money, you could pay on the money, or you could take a partner.
I could.
Okay.
But my theory in life is the only people that survive are the ones that can adapt. I'm very adaptable. If I can find a deal that makes sense for me and you, I'm interested in talking about it.
Now, your one theory that we talked about, I know you have multiple scenarios, is you want to do the work, or at 30,000 or whatever your repair cost is, that's you doing most of that work, and
I'd say maybe 40% of it.
okay.
I
I just want to let people know that.
Yeah. No, I speak fluent Spanish, and I've hired people, day labor, and I can tell them what to do. And I pick up painters all the time, roofers. So
What would the judgment?
the judgments were for unsecured credit lines back in 2008. Exactly. Yeah, when nothing was
where
selling.
when you go bankrupt.
And did the judgments come later? In 2008, they're about to drop off.
Yeah,
At
they
least
came.
as a lien to property unless they reaffirm that it's 10-year window or that.
Yeah, unfortunately, I'm very honest, and so when they call and say,
That's
hey,
not
is this
unfortunate.
your loan? I say, yes, it is. You know, I don't say, hey, I'll go talk to my lawyers, I'm not gonna say anything. So that restarts the clock.
Well, they have to file, they have to file to reaffirm within 10 years or so. At least as a lien on the property, it's on your personal credit, but any lien against the property has to be reaffirmed after 10 years. So if it was filed as a judgment in the register of deeds office, if they don't reaffirm it, then it's no longer a lien property. You wouldn't be able to get a bank loan,
Right.
but it's no longer a lien against the property after 10 years.
Well, the liens are not 10 years old.
That's what I'm saying.
They're
That's
not.
what I was wondering.
No, they're not. They're not. So,
All right.
okay.
There you go. We like it. We like it. We like.
Oh, I didn't mention the most important part. It's a single-family home. It actually has 3 parcels. Combined, it makes 0.66 acres. You may not, if you go and look it up, you might think, hey, this is a little tiny postage stamp lot. It's a small lot. It's not. It's actually got 3 lots, all at the same address, all combined. 1425 square feet, ranch-style house, 3 or 4 bedrooms, 2 baths. I put the second bathroom
How
over.
many square feet of land do you have?
I haven't figured square feet, but I'd say the acres is about 0.6.
How wide is it? Length and width?
Can I use the green board?
Is the house on more than one of the lots? Is the house on more?
See, now you get
No.
now you get to the fun part.
No.
What's the zone? You know. Forget talking to these guys. We do.
I've got to check the zoning. I need to look that up. I know it's on one. You said one of these ones.
It's probably like RS 5.
RS 10.
10, yeah.
Oh, there you go.
Is RS 10 allowed 2 on this?
No, it's 1.
It's 1, okay. So the property is shaped like this, and then I have the land behind my neighbor on the left.
Is there a street back there or an alley?
No, there's nothing, there's just a bunch of trees back here. And it goes kind of, so I've got this, and I've got this.
Where's the house at?
And actually, this is part of one of these. I think it's part of this one here. And then the house is right here, driveway here.
How is that? 3 lots? It looks like 1 lot. That's just.
This is one,
One in the back, one
Two.
in the left.
3.
There's no access in the back at all?
No access.
There's no alley back here?
No.
But it's literally it's a lot with a separate parcel number?
It is. It has the same address, but separate parcel numbers on 1, 2, and 3.
And it doesn't touch each street?
No, it does not.
So you gotta get that by helicopter.
Well, this.
Well, I have to put an easement.
Yeah.
If they let me put another house back here, I'd have to put an easement in here to allow access. And then my other neighbors over here, so I own land behind them, but it's on an angle. This one is a full rectangle.
And no alley, nothing touches back.
No, there's no alley. It goes back to a creek, and then someone owns a whole bunch of land behind there. And if you keep going, you hit Haywood Lane.
Yeah, no, I mean, no,
Well, you know, an option is if this guy wants more land, he can sell that.
you're not.
Actually, I tried to sell this land to my neighbors.
That's what I mean.
Yeah, and they weren't interested.
You're not
Well-
at the end of the street, are you?
No.
Well, it can't be. Well, good. There you go. We like it. We like this kind of stuff.
All right.
All right, let's go introduce.
You're gonna pick on me.
You raise your hand. Never raise your hand. What are you in the military? Who are you? What are you doing here? Who invited you?
Les invited me, Anthony invited me. Les introduced me to Anthony, and we met at auction last week. And my name's Paul Ponte. We have a property management company. We manage, I don't know, over 100 properties, 150 maybe.
Where?
All over.
Davidson.
Davidson, Williamson, everywhere. Sumner. We've got them all over.
How far?
Me and Davidson, and the 7 surrounding counties.
Okay.
Yeah. But we're a full service brokerage, so we buy, sell, list, and then we also invest, we buy real properties. So we try to buy, you know, we just like anybody else in here, we try to buy properties, and as a matter of fact, he can be a jerk when it comes to the auctions. He can be, you know, he'll just push the numbers.
Why do you think we invited him to come here?
Yeah, he's like, you know, you need to come to this investment meeting and learn to do what I do, push the price up. But we just try to buy properties.
We just like to run people out of money, and then I'll go back to work.
So no, that's it. It's pretty simple. Real estate.
You have a construction, you got a couple crews, you got some, you got wherewithal?
Okay, so my father used to have his contractor's license. He does no more, but he's been doing this for 30 years. I've been doing it for 8. But we have crews that buy and build. Well, we buy, they build, and then we refurbish, and you know, some we turn into rentals. We don't do any buy and hold.
So you do turnkey rentals. We buy them, fix them, get them ready, put a renter in there, and then sell them off.
Not really. Not really. Here's what we do. Yeah, well, no. Here's what we do. We have rentals that we have for our clients. Our clients, we go and then we have X amount of properties, and we rent those properties. But we buy and flip. We don't.
Okay.
Yeah.
All right. Well, just a thought. Sir?
Yeah.
That came before.
Yeah, no, I have not. This is my first time. I'm not one of Leslie's fish, so he reeled me in. My name is Jeff Flowers. I've done a few deals with Wes over the last 4 or 5 years, I guess. So I kind of got into the flipping business, I guess it was 2012. My partner is with National Rehabbers. He's a contractor. He's kind of the nuts and bolts guy with a license. I'm more or less the investor, the buyer. So we've been doing a lot of flips, and then the past 2 years we've been tied up on an infill project in East Nashville on Shelby. We were just talking to these guys about. We took a big drainage area, filled it in. We've got 4 lots out of it, and we're.
Well, I know that drainage area.
Yeah, that deal. Yeah. So we are. We got quite a bit in the ground there. We've sold 3 of those of the 4 that we got up, and we're about to start 4 more. So I do a little bit of lending. I've done a few deals. You know, for people that need some cash for 6-month type deals.
Yeah, we always like money, guys. Sir, you've been here.
First time.
Oh, good. Go ahead.
Stephanie invited me, messaged me on LinkedIn and Facebook and something else. I was like, okay, this is obviously important. I'll take a look. Yeah, first time here. I'm in Murfreesboro. Primarily, our business is in Northwest Tennessee. Martin, I don't know if anybody does any of that area. Martin, Gibson County. Okay. We own that. That's the big question.
He's not here. They just bought a Blake house up that way too.
Yeah, very, very cheap, low-end properties, but the rents are great. So we have about 60 units there. We own about 10 here, and then throughout the Tennessee, we own another 50 rentals. So we are pretty much strictly buy and hold. We do about 10 flips a year, and then also I broker for hard money. So I was telling Steve, if you're brand new, I can do 3 and 15. If you're experienced, I'm closer to 2 and 7. So if that's of interest, we can go on first deal 21 days, second deal about 7 days.
Do you, so you buy houses over in McKenzie and Martin?
We have one in McKenzie, about 40 in Martin, because my family's from Martin.
Okay.
So,
Okay, because we've got one right now that we're in the process of rehabbing over in Martin. It's near the college.
Okay.
It's over off of Peach Street.
Okay.
Okay, so I don't know if you know the area.
Yeah.
Okay. So, if you're interested, we're going to sell it. It'd be good for college students or just single family dwelling. It's in a great neighborhood right there.
Okay.
And then we've got one in McKenzie that we are in the process of rehabbing there too. And that one we don't want a whole lot for, but it would make a great little rental.
Okay, you hit the sweet spot here because you'll get a lot of properties. And Stephen, he's out in Memphis all the time. We buy all through the state, so anywhere you go,
And
all
then
the state.
what about Fulton? Do you like full?
I don't. It's just so blighted. We own quite a few in Humboldt too. That's a
Yeah.
pretty
Yeah,
blighted.
we were told to stay away from
Yeah.
Humboldt.
Today I bought one for $900, sold for $4,500 today. It's a nice house, 1,200 square feet.
Yeah, that's
4,500
Humboldt.
bucks, yeah.
And unless this is an education school, so let me give you a little tip. When the man starts quoting some prices on lending money, you don't say, "Wow, that's good." You say, "Not much, huh?" Okay, just next time the guy opens his mouth, remember. Wow, that's a lot. Anyway, we ran a little long, which was, but it was very interesting. We got a lot of good new people here. We thank you for coming. I thought that this speaker, who I met about 2 months ago, he's the only meeting I really go to at 9 o'clock, which is right in the middle of my corporate meeting, but I still go to his on Thursday down in Cool Springs. I just thought that this topic was so important because most of us investors are gamblers. I mean, big time gamblers, just rolling dice and playing loose and free. And we let these people in these houses that we buy, and Steve and I, we buy these houses that roaches are running out of and breaking their legs as they're running out of. And we're sending people to go in there and to buy these houses uninsured. I mean, we're worried about all kinds of things, and we're sending them in a house we just bought for $200,000 in cash, and we're letting these people go in there with no insurance. For a lousy couple of bucks, we can protect ourselves. And the second thing is, I was without life health insurance for 10 years. Now, fortunately, I'm perfectly fit and healthy, so I really didn't need it. But Joe showed me I never wanted to go to Obamacare because but it was free. I mean, basically, and then he showed me a way to offset I'll let him explain it. But I want him to explain a couple of things. We're just not real estate investors and wealth builders. Gee, if we don't take care of ourselves and all the other people around us, making all the money in your world is not going to do you any good when you're constantly getting sued, constantly getting attacked from outside sources. And that's what Green's about. Not just making money, it's how do you save money? How to do 1031 exchanges? And put money away in your Roth IRAs and all the other little things that we don't think about. So I'm going to bring up Joe Gravy right now, and he's going to tell us everything he hates about insurance.
Yeah.
Joe Gravy.
Very Thanks. The class, open up your textbooks to pick. Where's your books? All right, but I do want you to get out your cell phones real quick. It's okay, you can get out your cell phone. Because I'd like for you guys to quickly text me. I know I'm an insurance guy. I'm not going to hound you, though. But if you want to talk to me later, especially right now because it's Obamacare season, I'm not going to meet you for coffee. I'm not going to play phone tag with you. But if you want, my phone number is 615. I want you to text me. And what I'm going to send back to you is what I call a smart card. And you can download my V card, call me, email me, etc. But just text me, 615-485-9533, or I'll write it down, 615-485-9533. Send me your name, first and last name, and I'll get back in touch with you. Just that way we can, you come here, you learn something, you go, what did that guy say? Or we can communicate then. But yeah, my name's Joe Graves. My friends call me Gravy. It's a funny little nickname. Last name Graves. And one night, a bunch of us were together. Might have been some adult libations involved, and we all walked out with food nicknames, and mine's just stuck for about 15 years. Insurance. The name of my firm. I hate buying insurance. That's a real name. Because everybody loves it. Great subject. Obamacare, builder's risk, and things I'm going to talk about tonight are going to be specifically geared towards you guys. Because in my world, and you said gamblers. Yeah, I get that phone call. I bought this property. Well, tell me about it. Well, I don't know. I just bought it at auction. You know, or things that the fastest way I've seen folks like you go out of business, because a bubble like 2008 only comes once in a while, is not being properly insured and something happens. So, of course, this is going to be stored online. Is that right? Is that how this works? Okay.
Yeah.
It'd be good to take some notes. I'm just going to go over some of the basic insurance forms, some of the things you guys need to be aware of. Go over a thing called co-insurance. You really need to understand co-insurance. If it's not properly insured and a tree falls on the corner of the house, you're going to be crying big crocodile tears. And then answer any questions you guys might have. Because, I mean, I could talk about this all night, but I'm only allowed 30 minutes or so. But, true. I'm going to doodle up here a lot, so for the camera or anybody like that, but so I've heard flipping, buying and holding, rental properties, all kinds of stuff. And I assume most of you live in your own personal home. So I just want to go over some of the different types really quick. We're going to talk about ho, ho, ho. Now, this is not Santa Claus, and it is not about a lady of the night. Good, someone got the joke. We're going to talk about homeowners policies. And they kind of translate to rental properties and such, but just for your own personal. Now, when you call one of those .com TV brands, the states, the bureaus, the nations, and you get a quote, most of us are getting this HO3. There's an HO1, a 2, there's an 8, a 4, a 6, a 10, and a bunch of them. Most of these you won't worry about unless you're renting. Call them HO4. You don't know that, but it's just HO6. Y'all need to stop calling things that aren't condos, condos. Not you guys, but a condo is a little apartment box in a building, not a townhouse.
Right.
There's a special policy for that. There's all these crazy ones.
6 is for condos.
6 is for condos.
Well, condo can be side by side, but it's still air rights. Condo can be a side by side.
In the insurance world, it is not that. Yeah.
In the insurance world, it's the air rights, it's the interior space.
So, because all the time, I got this condo now at the townhome. You know, it's a row house of some sort. And this also gets into, and there's different acronyms: fire dwelling, prop, PD, FD. All the different carriers call it different things, but that's for your rental properties. There's a fire dwelling 1, a fire dwelling 2, and some have a fire dwelling 3. And what these just basically mean is you move up the scale, there's more things covered. Oh my gosh, all the time. You've got a background in this. I thought that was covered. Now, HO1, very basic policy. Things like volcanic eruption and planes falling from the sky. It's very basic stuff. And what happens here is people think that water is covered, and they get a burst pipe, so they buy it, because so many things aren't covered, it can be really, really cheap. And I want to use the term, there's some landlords, the cockroach landlords, you know, that don't care about their properties, they'll typically buy these.
Look at the meat food.
I'm panning the room.
I haven't read it.
Because you said about cockroaches, because they can be very inexpensive, and they don't really care much about the insurability of their property. They either have something for a mortgage or something. But very, very, we call them perils. Just name, a peril. It's a named coverage. HO2 moves up. I forgot to log on here. But your homeowners policies, most of them, that's from your State Farms, your Allstate, your Nationwides, your Travelers, your Eries, and so on, tend to be your HO3s. Why we do those on our personal homes? Number one, water. Kind of is covered. What I get is when you get a quote, what's my price? The little lizard said it'll take 15 minutes. How come you're asking all these questions? Speaking of questions, just for a little show and tell, I'm going to hand one this way. And at the top, so when it, you know, I love what I do, but sometimes, you know, they go, don't you just need my name and the address? These are accord forms. All you need to know, this is the ugly paperwork that happens on my side. I just want you to pan them around and flip through them. So no, I do need to know things like the size of the lot. Is there a deck? Is there a fence? Is there a pool? Whether it's a rental property or one of your own personal. I love my mortgage friends who will call and just, they give you like 5 lines of info. So just as an example, whether you're getting a commercial policy, rental policy, or your own home and auto, a lot that goes into this. And if your agent isn't asking a whole bunch of questions every time, even if you're buying a home to flip in 30 days, you're going to get shortchanged when that kid breaks into graffiti it and ceiling collapses on, or whatever scenario happens. But so your homeowner's 3 is pretty much what you're buying, covers everything on the building except what's excluded, and then there's 16 perils that are covered for your stuff. And you just, not that you're going to call up next time and go, is that an HO3? Because Gravy said I need an HO3. But you just need to be aware that sometimes if the price sounds too good to be true, starts with farm, ends with bureau, it's a good company, but you need to understand what the policy language says, because this is a contract, right? You guys are used to contracts, and you want to be sure that you know what you're buying. Get rid of this. So fire dwelling policy. Who does the who buys and holds? Are yours are held for your investors? Or
No, if we buy properties to flip, we just hang on to them during the time that we're doing the refurbish.
Okay.
Contracts, we get contracted.
Okay.
Yeah.
So vacant. Vacant with a remodel. And some of these things kind of flow into each other and transfer. It just depends on where you are. I'm just going to put BR for builder's risk. And then there's your fire dwelling 1 and 2. And then a couple write this thing a 3. So your flippers, you go in, buy a house, whole bunch of houses, etc. And I've heard some numbers like, I got a policy for $250. Ooh, really? Because what I want you to understand, we talked about perils a minute ago. What's covered, what's not covered. And I love that you said gamblers. That's a great word for me now. It's like, oh, you're gambling. Because the fastest way to go out of business with what you're all doing is to have a liability claim. Because a lot of these either have none. I've gotten policies, there's no liability coverage on it. Not your fault that kid was cutting through the yard. What's that mean?
Somebody else popped along and walked through.
Okay. That a kid was cutting through the yard and broke his leg. You're liable for it. It was your yard. So you just thought you bought this house at a really low price. You're going to put 40 grand into it. And you're going to make all this money. And they call that, what's that Bart? What's that guy? Bart Durham. Oh, you know who he is. Yeah, Bart Durham. Or Michael Ponce.
800.
For all of you that don't live around here. Yeah, for those who see this in 1,000 years from now or in other cities, you got one of those lawyers that's on a bus that says, when you get hurt, you call me. And nobody wants to call them until they get hurt. And they go, my liver. Oh, what's that, Bart Durham? And then they call him up. And Bart doesn't go, oh, he has no liability coverage. Let's let him pass. It's 7 figures. And it goes down from there. Vacant remodel. So be sure that you have liability coverage. Builder's risk policies. Typically for ground up, or if you're doing really heavy renovation. Moving walls, like my house, forest. I'm in kind of a situation, I'm kind of a lean and all that, but I have a house. I got a little one over my head, and I decided to just get out. Got someone coming in. I'm not saying that's what you should do, but these decisions, someone else is coming in, they're going up and out, putting 2 more bedrooms, another bath, etc. Good, because that's over my pay grade at the moment. Well, with all that, I gotta buy a builder's risk policy. So you really need to discuss with your insurance agent what you're gonna do to the home. And be sure whether they're gonna write a fire dwelling, a vacant under remodel, or a builder's risk. A lot of these, from the cheap ones, don't come with liability. So we get stuck. I got good coverage because I'm moving a wall. If someone cuts through there in the middle of the night, hurts themselves, now they own your home. Well, unless you're structured properly, right? You protect yourself. But so when you're out there, you buy a property, you're looking at property, what it is, how big it is, where it is, etc. You know, I have 3 clients in here, but you know, am I holding it, flipping it? Am I doing a minor remodel? Am I doing a major remodel? And then when it comes to buy, hold, and rent, you just want to, again, and I can go all night into what is and isn't covered. That's already a boring subject, right? Yeah. Yeah, you're shaking your head, but it's going to be the fastest way you'll go bankrupt if you don't have the right thing. So, rental properties need something else. Yeah, liability, builder's risk, homeowners,
Joe?
actual cash value, yeah.
You just mentioned that in case, unless you had your home structured right, as if, now, if I properly put it into a trust or an own corporation, I'll protect myself. Well, that's, you know that's wrong. Well, I mean, I'm not correcting you, but that, you know, if they can sue you, they can sue that particular company if they cut through that property. So, I don't want people to get the wrong idea that.
Well, thank you
that's
for correcting me, but, because I've said something and they're like, well, if you structure it a certain
Yeah,
way.
you know, I'm just saying.
That's why they talk to you and Steve and the others that are here on stuff like that. But I mean, if you don't have liability coverage or the right name perils, or actual cash value and replacement cost. Anybody want to help me define those? Have experience with those?
Well, I know in Florida, they started to do the replacement cost. And then they had some crazy numbers about how much, you know, how many square foot your roof costs this much. And my home, my 1960s was a 2-1. I made it into a 3-2 home. They said it was worth $325,000 replacement value. That's what they gave me insurance for. When I was building brand new 3-bedroom, 2-bed, 2-car garage houses for $125,000, I was wondering where they got that number, but they're the insurance company, so
Yeah.
they didn't give me an answer.
Well, you guys are buying on what can I buy it for, what can I sell it for? To be far from what the insured value is.
Right.
Come into East Nashville where I live, you know, some like my house, a little asbestos shingle box. But you get something with that ornate trim, the railing, you know, what's that?
Craftsman.
Yeah, exactly. Tornado runs through there again, like it did in what, was that 98 or whatever? Yeah. I moved here the year after that. I heard about the tornado all the time. Now, you might have paid a certain amount for it and it might sell for something else. But what is it going to cost to rebuild it in that way? My house built 1948, asbestos shingles, has the original windows. Actual cash value says, whoo, those windows are old. Tornado takes out the house. I have an ACV policy. They say, yeah, those are worth about $10. You know, the salvage yard. Very simplistic. Versus a replacement cost policy says, now, if I didn't have granite countertops, I'm not going to get granite countertops. But it's going to say what was there, what can we do to replace it in today's world, materials and labor, to make you whole again. Think yard sale, and this is your stuff too. It's replacement, actual cash value for roofs or your things. You might have a 50-inch television, yeah, but you bought it 5 years ago when it was cool and new, and now you can get them for $250. 4K, all that stuff. You might have paid $5,000 then. Not 4 or 5. We know with cars, as soon as you drive it off the lot, it goes down in value. That's how car insurance works. The value of the car.
Isn't a roof a good example, because like on the actual cash value, that they'll ask you how old your roof was, and they won't give you the same amount of the replacement
Yeah.
cost on the roof.
And that's where with your personal homes, that gets into like each company and what they do. And of course, if people are watching this later, you know, we're in Tennessee and what happens in other states and laws and such. But yeah, roofing, it's always blown me away that something that wears out like a roof can get totally replaced by insurance. But it can, if you have the right policy. But more and more companies are doing it where after maybe 10 years, it's changing to an ACV policy, et cetera. So you just, I know you all get so excited, you get a brand new policy to go home and open it up and read it cover to cover. But just things to be mindful of. It sounds like, wow, that's half price, and that place I got now might be could be a good deal, but there might be a reason. Yeah.
I have a question. I had a unique situation. I had a house that I had bought in 2008.
Okay.
And got caught.
That perfect time.
Yeah, got caught. And I had to rent it out. So I'm renting it out. And I get a phone call. And I see one of the tenants that was there said, hey, you know, somebody hit a telephone pole and they knocked the power out.
Okay.
So when I get there, there's a telephone pole. It's on my property. And
Like it fell on your property, or it's okay?
it almost fell on my property.
But it's in your yard.
It's in my yard.
Okay.
So, the city, I guess sent me the bill and was going after me from, I guess, from an insurance standpoint, that I had to pay for it. And I said, well, I didn't care. They said my tenant did. So I was trying to figure out how would that work. I ended up changing my policy to what, but I was trying to figure out how did they end up doing that, because they didn't even have to, they sent me a letter. That was the first thing.
Okay.
And then but I ended up kind of getting out of that situation because the guy was visiting a friend who was actually tenant, but he wasn't there. But the police was told him that.
So it gets even worse. It wasn't your tenant; it was his friend.
Yeah, it was his friend that hit the telephone call. So I told him that he didn't stay there, and I had to show proof of the lease and everything. He didn't stay there. But I was just kind of shocked that it was going to happen. But they said, well, the man told me at that time, he said, well, they wanted to sue me, they would sue my insurance company. I'm like, is that possible? So I was just thinking about it. I was just kind of reminiscing.
Okay. So are you asking like,
Yeah.
should be paying for it, or why did the city come after you?
Yeah, more or less that.
Any more?
Well, your tenant should pay for it, and you should sue them for it.
Yeah.
You should have, if they want to come to.
I mean, well,
Tenant did damage to the property, city's gonna give you the bill. When you knock a telephone pole down, you run off the road and hit a telephone pole, city's gonna bill you.
Yeah.
On your property, your tenant does it, city's gonna bill you. Your tenant causes the damage, you gotta go after your tenant. That's just
You
the,
gotta have the lease to, spell it out.
in that situation, you wouldn't have to, they damage it. No, but yes, you should, absolutely, you should.
They're responsible.
There's
Can a
still,
landlord, instead of suing the tenant, can a landlord make the tenant claim it on the renter's insurance?
well, and that's another thing, but that's kind of that's a real rarity, damage to municipal property that's on your property. And that would be, who's gonna think about somebody running over? a
Well,
telephone
requiring
pole?
safety
Yeah.
liability insurance as well.
It's just super rare. I mean, but yeah,
my sister owns a telephone pole in Northern California. She
yeah.
paid on it for 7 years. So, question over there.
Yeah, in 2012, I lost my house on fire.
Okay.
And the insurance calculated everything and they sent me a spreadsheet. And in order to rebuild my house the way it was, I need to borrow additional 50%. So, to get me out of this basically, they did not obligate me to rebuild the house. So they kind of let me, walk away from the property.
Okay.
But is it possible,
To,
well, for them, if we to calculate that to rebuild the house, I need additional 60 grand mortgage.
You could have had a replacement cost that increased since you purchased your policy. Would I assume that's the original replacement cost might have been 100,000? Property values went up, construction costs went up, your new replacement cost is 150. Your policy only worked for 100,000. That, I assume.
That
Yeah,
could
but
be.
the company estimated how much it would be, right?
It was the kind of policy you
Yeah.
had probably.
Yeah, so what he's
Yeah,
saying is
that's-
that if you bought, and we'll use that 100,000, in year one, and if this happened year three, well, the home's appreciated in value. And if you don't have a policy, well, one, when your policy goes up every year, you're like, oh, I didn't do anything. I didn't claim anything. Why me? Well, you're in a pot of money with a whole bunch of people. So when Bubba in Knoxville has a theft and splashes some water out of the pool, everybody has to put, now he's going to pay more into the pool. That's why everyone's goes up, inflation, cost of rebuilding, medical payments. I just went blank on the coverage. On your homeowner's policies, your HO3s and your HO5s, most of them are going to have something, whether it's due to inflation, a tornado rips through a whole neighborhood, and suddenly the guys that live next door to me who work for $20 an hour can suddenly get 60 and 80. And plywood's through the roof.
Yeah.
I mean, Florida knows what it's like, So there is a percentage, usually 25, 50, or some have an unlimited amount to rebuild your home. So as the insurance guy, I've never gotten into the part on the mortgage side of things and why you had to get a bigger mortgage. They should come in, if you have the extended coverage, we insured it for this, we'll give you this much margin. You may not have had it properly insured, and that's going to get into the co-insurance. I'm going to go over in just a second, kind of end on that with some questions. So that scenario, based on what you said, they came in and said it's going to cost this to rebuild it. We'll rebuild it as long as you had it properly insured to begin with. And what they call a code, that's actually a good lead in things. Now, why more of a mortgage? I asked the mortgage.
Well, your
company.
actual value was a lot less than what they estimated that you
Well,
It
that,
was cheap.
and maybe that could have been an error in the beginning, not maybe you. Again, I bought this house for 100,000. So what? That's what I said. I don't care what you bought it for. I got to calculate, well, for a homeowner, what's it going to cost to rebuild it? And that could be from remodeling the bathrooms, the granite countertops, the ornate trim, and all that stuff. So, now in the investment world, you may not care as much to rebuild it. You can cash out. That's something else.
One of the contractors I worked with had damage occur to his house. The insurance company offered him $35,000 to fix the damage. I don't remember if it was a tree or what.
Okay.
He said, no, that's not enough money. It's going to cost more than that. And they said, no, all we're giving you is $35,000. So he ran all the numbers and came up with $90,000. And he had his attorney call him, and he got his $90,000 because his numbers were right. But they were trying to pay less, which is not unusual.
Okay. My rule of thumb, if you got a claim, it's not a true emergency, you should have, and as most of you are in this, you should have a good plumber, you should know a roofer, or someone that can be on your side before the claims adjuster comes out. Don't call the toll-free number. Please call your agent and discuss it. I can't believe the number of referrals I get from the states, the nations, the bureaus that they're non-renewing somebody because they filed a $500 claim, etc. That's not what this guy had, but this leads into a rule of thumb. Call your agent first, assess whether it should be filed as a claim, and then have somebody, a roofing contractor, plumbing contractor, someone, come out there and be on your side when I know I'm saying this and the insurance companies are going to listen, but before the insurance inspector comes out, especially roofing.
I got a new roof with some help. It was well worth calling the insurance company on that.
Just put them to work for you, who can actually go through and go, no, this has to happen, and there's a new code in this county, and that's going to cost this much. Hopefully you have ordinance protection, etc. So, there's an example of they lowballed them, and he fought and got more. So, cash value versus replacement cost. So even though that TV was 5 years old, they're not going to get you a curved screen 3D TV, but they'll get you a new 50-inch television, not give you yard sale pricing. So one last quick thing, is I see this so often. It's a little bit of geeky math. I'm going to write it really quick. I can get into it with each of you later, but I want you to understand co-insurance. You may have heard that in health insurance before, my 80-20, my 50-50. There's something in property insurance too. And I know it, but I also have to look at it to be able to write it down. It's a formula. What you did insure your property for versus what you should have insured it for, maybe the 100,000 and such, times the loss, SS, equals how much money you're going to get. All these companies have a somewhat secret co-insurance. You can't just say, I bought a house for 100 grand, but I don't want to pay that much premium, just insure it for 50. Because that's what we would all do. We don't want to pay as much, and then we would get in a fight at claim time. You've got to insure a property. You should insure a property as close to the real value as it is. And companies will have either usually an 80% or even 90%. So if you bought it for 100 grand, you better insure it for, depending on the carrier, 80,000 or 90,000. What you run into is if you don't do that. So let's say you bought a house for 250, but you're on a budget. So you insured it for 200,000, or you bought it for that. It's going to be where insure it for 200 grand. That's what I bought it for. This company has a 90% co-insurance, so you should have insured it for 225,000. Another zero. So let's say you have a loss of 40,000. $40,000 loss. Tree falls on the corner, whatever it might be. Well, they're going to come in and say, what you did insure it for, did, what you should, 225,000, that math is 0.89. You didn't insure it for enough. What they're saying is, since you didn't care enough to insure it for close to full value, we're not going to pay you a claim at full value. So they're going to take that 40,000 times 0.89, you're going to get a check for 35,600.
And that's in the contract with the insurance company?
The co-insurance?
Co-insurance policy is in your HO.
Yeah. So I'll see it. Yeah, but just insure it for this. That's too much. What happens when you have a claim that's not properly insured? This goes into effect.
Let me ask you a question.
Yeah.
If you buy a house for 250 and the land's worth 50, you don't have to
Insured
insure
value, we don't include the land.
Okay, so we don't have
So
to.
we're taking out the land and all of
Okay,
that.
okay.
But so you insured it for 2. You should have, it's worth this, but you should have at least insured it for the 225, because that's their co-insurance factor. So this is a lot. But there's what you should, what you did, and how it's going to hurt you when you have a claim. Seen a lot in investment properties.
Is that on replacement cost or just an ACV?
Both.
Isn't it the agent's onus to calculate replacement cost as long as you give them accurate square footage?
Yeah, those ugly forms I sent around.
Right.
I mean, we've got our own worksheets, but those are terrible.
So unless the person gave the agent like bad information, like.
And what happens, the song and dance. You're in a hurry, you want to get a deal done, you want the best price you can pay, the insurance agent's busy, they ask as few questions possible, most of them. And most of the time, nothing happens. You sell the house, flip it, whatever it is, and nothing happens. It's just when it does, and suddenly the companies say, no, we're only going to give you 35.6. You're going, well, what about the other, $4 grand and plus?
Now, for us real estate investors, can you get just liability only in case that kid does run across? We don't care if things break on a house because we'll be fixing it anyway. That's our theory of gambling a little bit.
Okay.
But if somebody walks on it or the kid plays on the front yard and steps on a nail or something like that, is there an insurance liability only?
Yeah, you can do it several ways. I mean, some policies, the liability is part of it, just like your homeowners and your personal homeowners is. On a vacant under remodel or some builder's risks, I can add the liability. Maybe if you're doing enough volume, you should have a general policy, an umbrella that covers everything. If you're doing enough properties, the numbers I heard from you guys and you, it should be on a scheduled form. That's really cool. So when you're doing one here and there, we take the info on a scheduled form, you get a blanket million or 5 million over all your properties, and every month, oh, we sold that one. It's pretty easy. But so yeah, you should have liability.
I really wanted to talk about the umbrella policy. I know you're right on time, but the umbrella policy is what a lot of us should have.
Yeah.
So what determines this? In other words, what you did and what you should.
The should would be like a
if the
replacement
insurance-
cost estimator.
If the insurance agent asks me, what's your property value? I say 200,000. The insurance agent says 200,000. Isn't that automatically 100%? Or are they going to come back and say the property value is going up, or is there going to be some subjective evaluation of this after that fact that tries to adjust the claim lower?
We all have access. There's one main one, a property replacement cost estimator. How many bedrooms, the little things, but bedroom, bathrooms, all this, but is it construction grade, custom, granite? Every home should be ran. Now, builder's risks, the insured, what you should insure it for, if I've done my job and ran it through that replacement cost estimator, you can take that number to the bank. If I just go, okay, 200,000. There you go, there's your policy. It's only cost this much. When the claim happens, you're not going to get as much money, and I probably have an errors and omissions claim coming because you're not going to be happy. You're going to sue me. Why didn't you insure it for enough? Well, I insured it for what you said.
Does it matter what you paid for?
No. Yeah, you buy a house for $900, but it's 1,200 square feet. The insured value is way more than that.
Yeah, we were hoping he didn't knock over.
Yeah, well, and for the investment nights,
Where's a good tornado when you need it, right?
Where is the tornado when you need it?
yeah, exactly. Fire? I mean, I know that. Yeah, we always store gasoline in the house. And there's so many scenarios and little nuances, but so for your own personal, you probably have an HO3, but understand what you have. Things like water, sewer backup. For whatever reason, your toilet overflows. If you don't have that line item, you're in deep duty, literally and financially. Whatever you're doing, flipping, buying and holding, etc. You got an agent, have a chat with them. What am I buying? Do I have ACV? Do I have actual replacement costs? Do I have any liability? Because that alone that's the fastest way to bankruptcy. One kid steps in a hole, they go into graffiti the house, they call Bart Durham, and now you don't own the house anymore.
Does your company cover, if I was to go out and buy a house, and it's an investment property, and it's been sitting vacant for 6 months, and I'm gonna buy it, and I'm gonna do a 90 or 120 day project, are you gonna cover me for the 120 days or maybe more until I sell the property and take it from a $170,000 house to a $370,000 house?
So depending on the scope, what you're going to do to it, are you going up and out? Are you knocking out walls? Are you adding on? Or is it just paint, carpet, and hardware?
Knocking out a few walls, maybe add the bathroom, bedroom, yeah.
And that type of stuff. It's going to probably lean towards a builder's risk policy. And it just depends. And what one carrier does for a vacant under remodel is different what another company does.
I understand that. That's why I'm asking. And for me, it's been harder and harder to find coverage. Companies want to do less and less than that. I still have coverage, and I still have folks who do that, but the spectrum is getting smaller.
Yeah, the belt is tightening in this market. For those that are doing fewer projects, I've actually got markets that if you're doing quite a few, the scheduled stuff, that's actually expanding. I've got a handful of new ones, but again, everybody's different, each house is different. Your agent should be asking a lot of questions, make sure they're doing replacement costs.
I
not
really
just what you
found
bought.
Joe, I really liked him, that's why he's the only insurance person we actually brought here. Because he does the extra step that a lot of the guys don't do. I mean, even our insurance guy, that's why we don't use you for our stuff, because he just asks what we want.
Exactly.
But we won't be doing that. But Joe's, yeah, but see, the reason I have Joe here is because when you can't find something in insurance, Joe's the guy. He knows everybody in town. And if he doesn't do it, he leads you to the right person. That's why I got Joe in here to teach today. He didn't pay me any money.
Do you got general liability? Because I know when I was blowing and going to building a lot, remodeling a lot, I carried $2 million general liability for whatever happened.
Yeah.
As well as workers' comp and builder's risk.
That's your general liability, but then you put a builder's risk on the home or.
Well, what about these people running across there getting hurt? You talking about, is that general liability? No.
Your liability for the building is, say, you're doing something to the home and you're putting in plumbing or something, and then you leave, and guess what? The county breaks, and there's a huge flood, you forgot to glue it, it's your liability.
Yeah, liability is crazy. Backstory, an example of liability that blew my mind. Somebody had a above ground pool they wanted to get rid of. They put it on Craigslist, homeowner, put it on Craigslist. Free, come get my pool. Some few people showed up to get the pool. While removing the pool, guy slices his hand. Surgery, all is nasty probably. He called Bardner? No, I don't know who he called. Homeowner policy pays out $135,000. This is a friend of mine with one of those TV brands. Pays out $135,000 for the medical and pain and suffering. You have to approach it as it's always your fault. They're in there busting out your brand new drywall, stealing your copper, and they get hurt, it's your fault. So you make sure you have the right liability or liability.
We won't just, Joe, I'm going to stay there for 3 more minutes. So we can go on, this is why I had him here. It's so important. I know you guys got a million questions. That's why I gave you his phone number. While we're still in health insurance, I know nobody wants to hear about health insurance, but I was so surprised when you sat right here last week and it was painless. You didn't jab me with a needle or anything. I got health insurance for the first time in 10 years. Just, if you can, off the cuff, how to talk about they can call you later, or like Steve has to get it. What's the minimum he has to do? Give your credit card and your social security number.
Give me your credit card number and your social security number. We're good. I'm good. Well, I mean, so we are in the midst of the annual enrollment season for what's lovingly called Obamacare. It's not Trump care yet or whoever cared. We still have 98% of the same law. So whatever's been on TV about this bill, that bill, executive order, that whatever, pretty much nothing's happened. So we're still playing by the same rule book. And if you want, need, or desire, December 15th.
Yeah, that's what I said. It's coming. That's why.
December 13th. By the 15th, I'm going to be in a jacket and a padded room. About 14 hours a day overall between phone calls, quoting, video sharing. So I'm not doing it right now, but I'm going to go home and work until 1 a.m. But if you or somebody else needs it, 485-9533, have them call me. I'm going to walk you through. We got 3 simple steps. We do a little quick phone interview. I'm going to have you watch some quick videos. because I can't re-explain co-insurance for health insurance 500 times. And then we're going to do a one-on-one through screen sharing. I'm not going to make, oh, there's traffic in Nashville. I'm not going to drive to you and you're not going to drive to me. I mean, we did this here because I was coming, but painless, seamless in about an hour of your life, maybe hour and a half if you've got a bunch of kids or a bunch of medicine. But, you know, on marketplace, off marketplace, subsidies, penalties, what's all that mean? I'll walk you through it. It's like what you all do. I mean, it's not hard. I hear 1031s and all, you know, like the back of your hand. I don't know what that means. But I sure know how to estimate what your annual income is, whether you're employed or W-2. You know, I understand the networks and what an EPO versus a PPO or an LMNOP is. So you make it simple. There's that old game show, Are You Smarter Than a Fifth Grader? Yeah, you know. So I keep it easy. So if you need it or somebody else. We also do life, Medicare, anything to do with people, dental, anything to do with people. And I thank you, because if I don't do it myself on the property side, you can't have every company. I know about 400 agents who, and some of them, like my older sister, who does aviation in multiple countries. So when Steve and Mark get their private plane, I hope you call me, because I'll have my sister insure it. I know people who are experts in different fields. So, but yeah, health insurance, let me know.
Joe Grady. Any questions from anybody out there? I know we don't have a whole lot of time, but you have Joe's number. And another reason, and the same reason I brought Joe in, a lot of us are real estate agents. We have no company that gives us like health insurance, and it was the simplest thing I ever did, and I don't know why I didn't have it for 10 years. But anyway, all right, this part of the night, I know we're really long, but I'm going to bring Steve up here, and he'll finish up the night for us. Steve Chase.
Guys, I'd like to thank everyone for coming. As you guys know, this is Green Global Real Estate Education Network. We have an investor club meeting here every Wednesday. We're going to be expanding into other areas. Probably Franklin and Murfreesboro are going to be first. They'll be coming up real soon. This is as Mark mentioned earlier, this is a network marketing company. We have online training that's available several hours a week. The idea that we're putting together here is to create something that has a little more energy, a little more intensity than your normal networking group. So we want you guys to have an education platform and have it be something that people are going to come back to, help grow. So we bring in a lot of different voices. And we also get together, share deals, and I've noticed that as we've grown, people are doing just that. We get a lot of communication in between each other. We've got deals flying around this week. We got a couple. We're about to make $30,000 on one that we bought. We'll make another $30,000 on another one. Next thing you know, communicating with the people that you're working with, and that's just a good group to be a part of. And also, you will see this company grow nationwide. We're going to integrate. We've done it to a certain extent. We haven't set the roots like we have here in Nashville. This is the home base. But we have the capacity. As you guys see, our Director of Education, Dr. Andrea Molinari, he's actually in West Palm Beach, Florida. And anyone who runs a meetup group or an investment club meeting that wanted to do the same scale or level that we were doing here, to do exactly what we're doing. You can broadcast it online. You can grow it online. You can grow your group. You can form and create your own group if you wanted to. For example, if you were in Franklin, which we're going to have a Franklin group going, not have to fight the traffic every night, watch it online. But anyway, we're all excited about that. We've got people that are getting paid in our network marketing company right now by bringing people in. We never do a hard sell push kind of thing because we're first and foremost about making sure we deliver a valuable education. That's the primary thing. You get guys in this company who are multimillionaires who bought and sold hundreds, in some cases thousands of properties, and they become your personal mentors or consultants, colleagues, people that you can work with in this business that you can get up on your cell phone and call. So it sort of creates a different relationship, a different mindset about education. We create more of a community here that's bound with a financial interest with our networking group. So just a good space, we thought, to build that kind of relationship into a company. So if you guys are interested in that element of it, and you're always welcome to come here free on Wednesdays. We normally try to, we open the doors at 6, get the meeting going at 6:30. Normally stop at 7:30, kick everyone out at 8. You're welcome to stay always about a half an hour once we wrap up. Exchange business cards. If you're interested in joining, I can sign you up, or Marcus or Mark or Irina can sign you up. And or if you need to know anything else about the network marketing company. So once again, thank you for coming, and definitely come back next week. I don't know who we got next week, Mark.
Thanksgiving.
God, who we have next week?
Andre, are we scheduled next week? Okay.
Oh, no, it's Thanksgiving
We're
week.
gonna go ahead and take down. Are we gonna?
Oh, we're gonna have a meeting
Okay.
here.
It might be like sometimes if something crazy happens real light, we'll just sit and have a roundtable discussion, kind of mastermind talk deals. For the people that are more intensely involved with the flipping, that are if you're members of the company, we do Tuesday night stuff, where we're getting around actually talking about wholesaling, marketing, putting together mailers, that kind of thing. And that's our Tuesday night group. That's the more intense kind of kick in the tail.
Yeah.
Kick in the tail.
Yeah, it's gonna be Thanksgiving celebration, so please let us know within the family.
Okay.
The Irina wants to make a
Alright.
turkey and stuffing and have a
All right, so we may just do something. It'll be a little more informal. We talk shop anyway, but we may not have an actual speaker next week. We may just kind of sit and talk shop, just get to know each other, make it social next week.
yeah,
Maybe
a little social time.
bring your own BYOB next week.
There you
All
go.
right, guys, thanks for coming. We appreciate you.